All right, guys, we're live. It's Justin Stenstrom from Elite Man magazine, and my guest today is Tim Sykes, the famous investor slash trader. And yeah, man, I'm excited to have you on.
No, thanks for having me on. I love your show. So, I'm willing to just share what I've learned over the years. I've had a crazy journey.
Thanks. Yeah. And like I mentioned a moment ago, I don't know a ton about investing. I actually don't really know a thing about investing, but I know I came across your story listening to a couple different interviews, but one of them was the London Real one, like probably a year or two back. And that was really interesting. And it kind of just opened my eyes of like how this is possible. And I think a lot of my guys kind of want to intro into this stuff too. My audience doesn't know a ton about it because obviously I'd never really covered this stuff, but I think they do. I've gotten questions in the past about having somebody on. I think you're the perfect fit for like investing and just getting like that start into it. And like, cause most people have like me, they have no idea where to get going with it.
Yeah.
But can you just talk, we'll kind of break down some of that stuff in a moment, but can you just talk about the whole story of you getting, I believe it was like bar mitzvah money back in the day when you were in your teenage years and you turned that into like 1 point something million?
Yeah. Yeah. So, I was a tennis player. I was playing every day for 10 years, thinking I was going to get into like a good college and get a good job. Instead, I played too hard. As I said, we were talking before, I'm Jewish. So my Jewish frail body wasn't like made for professional sports. I had surgery on my arm, Tommy John surgery. So I was walking around senior year of high school with two casts looking like RoboCop. Couldn't do much, but I could type. And this was 1999. My parents gave me control of my bar mitzvah gift money. It was just sitting in like Series E bonds. It was like 12 grand. They thought that I would lose it all in the market. They thought that it would be a good lesson. Instead, I got really obsessed with trying to grow it. I was just an investor in the beginning, but my account wasn't really doing much. Investing takes a while. I didn't have that patience. So I got into day trading. Couldn't afford the big companies at the time. It was like Yahoo and like Netscape were the biggest. And, my small account, I couldn't get much. So I gravitated towards lower price stocks. In senior year of high school, I pretty much ditched all my friends, ditched all the parties. I had two casts on, so I had nothing to do. And I just got obsessed with learning about the stock market. I turned the 12 grand into a little over 100,000. During college, I still went just, because my parents wanted me to, but I didn't really go to class that much. I took some night classes to focus on trading during the day. And before I graduated college, it was 2 million. But I started a hedge fund senior year of college. Stupid thing to do because I was a cocky young guy who had never had a big loss. I dreamt of like, I turned a few thousand into a few million. Of course I can make billions. No. So I lost a third of it due to my cockiness as an investor. And I didn't realize risk management rules, that protect me. This is what I teach now. So I sucked at running a hedge fund, but I was on this TV show called Wall Street Warriors, which was a hit like a decade ago. It was like one of the first HD shows, so there wasn't much content for the HD channels. So I became like king of the nerds. Anybody who had like an early HD TV saw me, and I acted like a jackass on a reality show, and I was drunk in every scene and played golf, and I, was like, golf on TV is boring. Let me spice this up. So I purposely hit the ball into the water, took off my shirt and jumped into the water and just picked out a random ball. And I was like, this is my ball. And so, I got like some excitement with trading in my lifestyle. And I was like, you know what? I don't need to manage money for rich people in hedge funds. Let me go back to my 12 grand. Let me teach people, because most people on the internet who teach about how to make money are full of crap. I knew that I had success. I knew that I had failure, so I could learn from both. I could teach both. And I went back to the 12 grand, and within 3 years, I turned the 12 grand into basically $250,000. So not as much as my first feat, but showing every trade, making video lessons, writing blog posts so people could see my screen as I do it. And that's what I do now. I have 9,000 students. I go back to 12 grand every year. And I just try to grow the account. I donate all the trading profits to charity. And then people can learn how to grow a small account.
Nice. There's so many follow-up questions and things I want to like jump off of from that, but
you can ask whatever.
Yeah, I think
no holds barred.
I love it. I love how that's how you are. I love how that's like your take on things. It's cool.
You have to remember, this is the internet. It's like the Wild West. You have all these gurus like, I will teach you to be rich. And it's like, come on, dude, you're not even rich yourself. Like, you've never done it. So for me, the only reason I got into teaching was because of the stupid reality show where people started messaging me like, hey, I want to turn a few thousand into a few million. So I wish I had had a teacher. Otherwise, I wouldn't have lost a third of it. But, I made it back. Now I'm at 6 million. So I've gotten better. The losses helped me, and then I can teach others. So any question, lay it on me.
Yeah. So, I mean, imagine too, if that show was like 10 years later or 15 years later, you'd probably be like a Jersey Shore fucking super famous dude right now. And like, but
It's probable. I was a little
yeah,
too early.
I gotta check that out though, by the way. I didn't know you were on a reality show. It sounds cool.
You'll laugh. It's like early reality show. They didn't have like the full drama, but
Yeah.
everyone was just so boring that like showing like their trading and their investing. One guy was a total fraud. He's in jail. He claimed to like manage $100 million fund when
Oh
in
shit.
fact he was just embezzling the money. So like, you can't really believe what you see on TV. But again, I show every trade. You can see my screen. So I use like the reality shows. I've been on a few reality shows now. I use that to get people interested. Like, why should you even want to get into the stock market? Then I teach the hardcore stuff, and then it's not so much fun once you go through my video lessons, because I have 6,000 video lessons.
Oh shit, 6,000. So what's the difference between, what was the problem with the hedge fund thing? Because again, I'm someone who pretty much has no idea about any of this stuff. And again, I want to break down the penny stocks and then get into some of the steps for people to take right now to get into this investing stuff. But what was the flaw with getting into the hedge fund, and what's like the difference with that? Why didn't it work?
Yeah, 100%. So hedge fund is when you manage other people's money, including, sometimes your own. I was basically half the fund, but I was like, I'm doing well. Let me try to get others. So you have a bigger, stack of cash that you can use on trades or investments. Theoretically, it should be the same thing, but it's not, because, I started reaching for the stars. I started going for home runs instead of singles. This is what I teach. The way that I turned the 12 grand into nearly 2 million and now 6 million, my average gain is just like $2,000. So I'm taking these small trades, 2,000 here, 2,000 there. Sometimes I lose a third of the time. I lose like 500. So it's about having more gains than losses on a percentage basis, and then your dollar gains being bigger than your dollar losses too. So it's technically impossible not to grow your account if you stay in your lane, if you stick to your
Gotcha.
rules. When I started getting bigger, and then there's more slippage, because penny stocks are stocks trading under $5 a share. They're tiny companies. Wall Street looks down on them. Pretty much everyone in finance looks down on them. It's like the Wolf of Wall Street. Most of them are scams. They have one or two products, but their stock prices can double or triple in a day or two. So if you have a small account, like I do every year, and like I teach, other people, you can make a few hundred or a few $1,000s in a day. And then, it adds up over time. When you start getting into millions or tens of millions or hundreds of millions or billions, which is what the majority of Wall Street is all about, you can't take the same trades. There's too much slippage. You can't get in and out. So it's recognizing that I'm like fishing in a small pond as opposed to like deep sea fishing, which is what most of Wall Street does. I like my small pond because a few $1,000s per day, I say 2K a day keeps a real job away. Wall Street looks down on that. Like if you go to people on Wall Street and you're like, oh, this guy, Tim Sykes, he's a great trader. He makes roughly $2,000 a day. They'd be like, I made $2,000 in like a minute, but they're trading with other people's money. So it's just two different games. And I teach because most people would be happy with $2,000 a day, but Wall Street looks down on that. So I'm teaching the average people, not the snobs.
Gotcha. That makes a ton of sense. So in the hedge fund guys, or we're talking about like the Buffetts of the world, those types of guys with huge, massive companies, and then like other people's money that they're playing with as opposed to their own, like what you're doing.
Correct. And they're also long-term investing. Like they believe in these companies. Most of the companies I trade are junk. They literally are like the companies, in the Wolf of Wall Street, but I'm not investing for the long term. I'm holding them for a few hours or a few days because there's momentum, and you can actually bet on the stocks going down. It's called short selling. If you know that they're a scam, scams always collapse. It's not a question of if, it's just when. So a lot of what I teach is just like typical chart patterns where you see signs that the scam is about to collapse. And you can make money as the scam collapses. And it's totally legal. It's just a very small niche. So I tried to get bigger because I didn't know the limits to my strategy. I lost 500 grand on one long-term trade. I believed in the company. Now I never believe in the company. I was actually right about the company too. They invented print-at-home ticketing, but I was wrong about companies. Even if they have a good technology, they can still go bankrupt because there's a lot that goes on with a company. So people, especially average people, they fall for these scams because they're like, the technology is great. Like, I love electric vehicles, or, this has a cure for cancer. And if you look at the stats, 99.9% of penny stocks fail. So I'm kind of like this cynic who says, okay, this company is probably going to fail in a few years, but I don't care. It's in play for whatever reason right now. Electric vehicles, for one, the whole sector is hot because of Tesla. So I'm just trading what's hot and I'm sticking to my patterns and I'm making, my 1-2 grand a day and it can compound.
Cool. I want to ask you about your patterns in a minute, but what did like the guys, what did Jordan Belfort and them guys in Wolf of Wall Street, what did they do wrong? And how did they get in trouble with the stuff that they were doing? And what do you do differently with your business and the way you've set things up?
Yeah, so they're taking massive positions. They're pitching their companies to, random suckers on phone calls. They basically invented boiler rooms. They would try to call people at like dinner time. This was pre-internet too, where Belfort was really doing the majority of the scamming. So you couldn't like Google what he was pitching, and his salesmen would just pump it up, make it sound amazing. They would call up average people and people would be like, it sounds good. So let me buy 5,000 shares. And, the broker that Belfort would, employ would take a 50% commission. So they're buying like 5,000 shares of a stock at 2, but then the broker is taking like $1 a share on 5,000 shares. So the broker is making like $5,000 for that call. The people on the other end of that call don't know that. They don't realize they're getting pitched a scam, and the company eventually goes to zero. Totally illegal. Belfort still owes $100 million. He weasels his way out of that. He's like incorporated in Australia now. People say like, oh, do you have beef with Belfort? I'm like, no. I think if you want to be a career criminal, I think you should learn from him. Like, I don't know how to have that little ethics and to really scam people for $100 million and still not care. But he created this whole penny stock world, the pump and dump world. And that was all illegal. For me, I don't pitch these companies as like the next Microsoft. I tell you they are all crap, but we're trading the pattern. We're trading what's predictable. I can still be wrong. I'm wrong a third of the time. So I'm using the volatility. And right now, as we're doing this call, obviously the pandemic has really devastated the world. But for trading, and specifically for people online and at home, it's been the biggest boom ever. I mean, we're seeing crazier moves now in 2020 than I saw 20 years ago in 1999 and 2000. So I'm having my best trading year ever. I've made nearly $1 million in trading profits this year, but I donate it all to charity because I think that it's important to give back. But more importantly, I show my process, and I want my students to follow me on the process, not follow picks, not believe in any companies. So I go against like a lot of the assumptions that people make.
Why has it been so good this year with all the volatility? Like you said, it kind of seems like it would be the opposite, where it'd be too crazy to pick the winners and, the timing and all that shit. Why has it been so good this year? And why have guys like you been doing really well?
Yeah, I mean, it's not an exact science. Let me be clear. There's no magic formula for getting rich, but patterns do repeat. History repeats. For one example, APT, they make masks. During the Ebola outbreak, several years ago, APT, everyone needed masks or thought they were going to need masks. The stock went from 4 to 12 in a few days. It eventually came down. Ebola wasn't really as bad. Aaron Hernandez killed more people than Ebola did. So it wasn't that bad. But at the same time, this outbreak has gotten bad. APT went from 4 to 40. So it's a similar kind of outbreak, but, different in size. So now it's actually huge. And, APT is just one mask example. I can name, half a dozen or actually more than a dozen mask makers now, and hand sanitizer stocks. Online ordering, Blue Apron, if you ever order groceries, Blue Apron went from 3 to 20 in a few days. These stocks are going insane with George Floyd. I mean, it's not just the pandemic. Obviously, there's a lot of social justice issues. So, you have an African-American owned radio station. UONE went from 4 to 50 when everyone says, hey, we have to support the African-American communities more. So anytime there's a lot of craziness in the world, it creates volatility, and little small caps and penny stocks start skyrocketing, especially with the pandemic where more people are at home and they're opening brokerage accounts. You have an app called Robinhood where it's so easy to open a brokerage account. They're getting 3 million new customers per month. E-Trade, one of the biggest brokers, the broker that I use, they only get 300,000 new people per month. So Robinhood has taken the lead. You have all these young people staying at home. A lot of them have lost their jobs, so they're looking to get into trading. So it creates more, fish in the sea, more fish in my pond.
What's the difference between E-Trade and Robinhood, and why do you use E-Trade as opposed to Robinhood? Because I've heard of Robinhood and a few of the other ones similar to Robinhood. I know of a bunch of friends and stuff, and I was kind of thinking about signing up at some point a couple months ago. Then I just kind of, lost in, or I got busy and kind of forgot about it. But what's the big difference between those two?
Yeah, I mean, I've used E-Trade for 20 plus years. like they don't pay me or anything. I just think they suck the least. I think all brokers suck. My cynical attitude applies to not just companies, but to brokers. E-Trade, I think, sucks the least. I think Robinhood sucks a little bit more. Robinhood has done an amazing job getting millennials because it's a mobile app. They've perfected their technology so you can trade on your phone, which I think is dangerous. You know, you put the wrong thumb on the wrong number and you're betting a lot more than you realize. So I don't like that. Also, Robinhood uses market orders as opposed to limit orders. So with limit orders, you specify the price. So I'm like, okay, on APT, if I see it spiking, I'm like, okay, let me try to buy 1,000 shares at like $4.50 a share. If it goes to like 470, I don't get it because I put my limit at 450. With Robinhood, you're just like, oh, I want to buy APT. You put in your order. You don't specify a price. When a stock like APT is spiking, yes, it did go to 40, but you don't know how high it's going to go. And if you're buying into the delirium, I mean, you might get your execution at 40 because you didn't put a price cap. It's like going to the grocery store, trying to buy a gallon of milk and just like giving your wallet over to the register and being like, here, take whatever this is worth. Versus milk should be like a few dollars as opposed to like if you give your whole wallet, maybe you have a few $100s for that gallon of milk. So Robinhood is good that it got millennials in, but it's very dangerous if you don't know what you're doing. Trading is dangerous. Like 90% of traders lose. So I'm just trying to teach the rules. I say that trading is a battlefield and I'm like, a drill sergeant. And most people are just getting decapitated and, destroyed and killed all around me. And I'm just like, whoa, oh God, I hate that. Oh, the blood is everywhere. Oh. And that's like the reality of trading. Like there's a commercial with the E-Trade baby. It was popular a few years ago where there's like a little baby doing a little dance. And it's like, look at me, I'm investing for the future. If that was a realistic portrayal of what trading, that baby would be black and blue, it would be bloodied, it would be all blurred out. It wouldn't be on TV. Trading is a battlefield. And unfortunately, most people don't know the rules. So they're on this battlefield. And if you use Robinhood, I say it's like coming onto the battlefield with like a squirt gun. And you're like, pew, 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 pew. And then I have like, a machine gun and I'm just torching people.
No shit. So the things that you can do on that's a good analogy. The things you can do on E-Trade are a lot more sophisticated and developed as opposed to Robinhood. And you can't set, just to be clear, you can't set that cap on Robinhood of like cutting things off.
So Robinhood Innovative, I didn't mention too, it's free commissions, right? So like literally everyone's like, wow, I can trade as much as I want. It's free. But what they're doing is they're also giving you worse executions on every single trade. Robinhood is actually kind of a messed up name for their brokerage because Robinhood, you give to the poor, you take from the rich. Mm-hmm. But actually what they're doing is they're taking from the poor and giving to the rich. They have a partnership with this guy, Ken Griffin, who's one of the richest hedge fund managers in the world called Citadel. And they farm out all the poor people's orders to Citadel. And Citadel, has to report their earnings. They're making, $40-50 million every quarter, specifically with their deal with Robinhood, because they're getting all the orders. And so Robinhood people don't understand, like not only do you have the market order problem, but you're also getting executed like a third of a penny or a quarter of a penny a share higher because Citadel is taking the order just a little bit before you. And they don't realize that they're farming their orders out. They're just like, oh, I saved $5 on my commissions. E-Trade charges like $5 for commissions. So they think that they're saving money, but realize like they're losing tens or hundreds of dollars on every trade. So this is Wall Street. Like Wall Street takes from people who don't know any better. It's like blood in the water and the sharks will attack.
So what is the downside then, if any, of E-Trade? You said it sucks the least. There's got to be some issues that you would fix with it. What are some of those things?
I mean, every now and then an execution can still be bad. They sometimes have like software issues, especially a lot of the time. Well, Robinhood has this too, where their whole software just goes down for like an hour or a day. Robinhood actually had a few times where it just went down for a whole day and you still have your stocks. You can't get in or out of them. Wow. That's just part of the game because they're overloaded. It's like, what America Online was like 20 years ago when they were growing so fast. And E-Trade has those issues too. Every broker does. That's why I say brokers suck. And I'm also kind of just bitter because I have to, you have to go through a broker. Like you don't have a choice, right? Like you need a broker to execute trades. So maybe one day there'll be an innovation where you can just like do your own orders. That would be cool, but I don't see that happening anytime soon.
That sounds kind of like a Coinbase or something, right? Like in the future of big cryptocurrency, you can just go on and make the trade yourself.
Yeah, I mean, crypto's a more efficient platform, although also all the shadiest people in the world I know use crypto. So like, I'm not a big fan of that either. I have all these like imposters who have like Timothy Sykes 75 and Timothy Sykes 453 on Twitter, and they're like, open a crypto wallet. So I have to be like, no, I don't have any other usernames. I would never say open a crypto wallet. It's like the Wild West right now, just with, the pandemic and what's going on in finance. I mean, it's just a crazy year.
Yeah. So how did you learn all this stuff in the beginning when you're just a teenager in high school? What did you got this idea to take all this money that you got, not even that much money. I think you said it was a couple $1,000 for the bar mitzvah to start investing it. How did you get your foot in the door, and how did you start learning about all these strategies that you have now?
Yeah, I mean, it didn't happen overnight. I mean, this is 20 years of me being obsessed with learning everything on my own. I never had a teacher. I never had a mentor. I would skip classes senior year of high school. I would go to the library. I made friends with a librarian. And there was like a whole bank of computers, like 12 or 13 computers in a row. And this was like back when the internet was very new. It was like dial-up internet. So I would load one web page on one computer and it would take like 30 seconds. So I'd go to the next one. So I'm like a madman working on 12, 13 computers. Now everything's easier. The internet's faster. But the internet is this amazing tool where you can learn so much about companies. Like I expose a lot of these scams. I write blog posts where I'm just using like Google Maps and I'm like, look at this. Like you can see exactly what their headquarters is, and it's like a barn. One time there was a doctor who claimed that he had some amazing cancer, cure, and I was just like, this is ridiculous. So I started Googling around, figuring out who he was. He had actually lost his medical license, and so I wrote a blog post and I was like, look at this doctor who lost his medical license due to like malpractice. Now he claims to have a cure for cancer. What do you think the odds are that he does? I would love a cure for cancer, but it just didn't happen. Then he wrote a blog post on his own blog, and he's like, I don't care if Timothy Sykes or the SEC comes asking questions. And I'm like, did this guy just admit that there's an SEC investigation? The SEC is like the stock market police. Mm-hmm. And so he's so stupid that he's like, Timothy Sykes is questioning me, the SEC is questioning me, and he gave it away that he was under investigation, and the whole stock collapsed. So I could tell you so many stories of all these stupid promoters. It's just sad.
Yeah. So what are some of the strategies though that you learned early on that you still have today that were effective? Because like you said, 90%, I think you said the number was, of people that do this or they fail in it. They're failures in this. What have you done to figure out to be one of the 10% of the people that actually know what the hell they're doing to make money from this?
Yeah, so a lot of it is testing out different patterns, being adaptable. Like I'm okay to trade an electric vehicle stock. I'm okay to trade a coronavirus stock, whatever's hot. I just focus on the biggest percent gainers. That way I never like fall for these stories and I'm like sitting there waiting like, oh, in 6 months, they're going to have their new car. No, I don't wait 6 months. Whatever is hot that day, I'm trading because the patterns are very predictable. With penny stocks, because that most hedge funds, most big investors, they don't care about these small little, stocks. Like there's not enough money to be made. So it's all these people with Robinhood accounts, all these people who don't know much. They're investing like they think it's like the next Microsoft. So knowing my competition like is a joke, I know what will like really get them excited. So if I see a press release, like, where a company says, oh, we have this new drug and it cures coronavirus like 98% of the time, I'm sure that there's going to be problems later on. But I know that hype-ish kind of press release can lure in a lot of idiots who are less prepared. So I buy the stock and I say, okay, this stock, maybe it's already up 50% on the day. I don't mind buying a stock that's already up. But I recognize that when there's enough hype, it can keep going. So penny stocks have legs for days, weeks, sometimes months before the scam or before the failure happens. So I buy stocks and I try to make 10, 15, 20, 30% in a day or two, and then I take my profits. A lot of the time the stocks spike, 500%. So I'm okay with taking a single. And if for whatever reason the stock doesn't spike, I'm okay with taking a loss. But my average gains are like 7 or 8%. And my average losses are like 2 or 3% per time. So I contain my losses. And again, my gains are bigger. So it comes down to discipline. The reason why 90% of traders lose, they don't have discipline. If they're losing, they don't want to take the loss because then it's their ego and they're like, but I researched it. I know I'm right. And they get stubborn. And for me, I've had so many losses over the years, especially the big $500,000 one. I don't want that anymore. So I've never had another big loss since that first one because I never want that feeling again. So I've really clamped down on losses, size-wise, and, that keeps me safe.
It kind of sounds like an analogy similar to, you're from Connecticut, you said, so I'm sure you're familiar with the Pats. like Belichick as a coach and why he's been successful. One of the strategies he's had for years is basically he doesn't fall in love with his players. And they come and go. He has them for a few years. He maximizes their output and gets the most out of them. And then he switches them out for somebody younger or better, faster, whatever. And he does this with 52 plus players on his team every single year. He puts out the best 52 guys and doesn't have those attachments with them. And even if they've been on the team for more than that, like 5, 6, 7, 8 years, even Brady, he's starting to get older. It was like he wanted to get rid of him a couple of years ago because he saw a little bit of a decline in his performance. But it kind of sounds like a similar way. And it seems like a lot of these people that do this investing fall for the trap of getting too invested in the company or the idea, whatever business that they believe in, as opposed to just looking at the numbers and how things are going and making the moves that they have to make.
100%. I mean, you fall in love with the company, you fall in love with the technology. This is what penny stocks do. They make it sound amazing. And so I have to bring everyone down to size, remind them that most penny stocks fail, most traders lose. So I'm like the cynical guy. And again, this is a battlefield. So like if you're a newbie on a battlefield, go watch Saving Private Ryan. Look at what happens to the people who are unprepared versus those people who are, hardened by war. You just got to see it. And the good news is, even if I can't save people in the beginning, at least my warnings reach them. So then they're like, no, I'm not, that guy's too cynical. He's messed up. And then they believe in it, believe in the companies. Then they lose 50 or 75% of their money. Then they remember my warnings. So I get a lot of my best students after they lose big. And I try to warn them, but until you lose big, you just don't believe how tough the game is. So I encourage everyone to have a loss. I don't want people to have a $500,000 loss, but realize that a loss is not the end of the world. You just have to learn from it. You have to learn what not to do. And you have to remember that terrible feeling. So everybody who loses is not the end of the world. You can get better, especially if you start this young. So I try to get like a lot of young people starting to learn. And I say, look, the money that you make or lose in the first year is negligible. Like my top student has turned 1,500 into now 12.7 million. He's made double what I've made in half the time, but he did not make any money his first 9 months. So can you go 9 months studying every day, learning, trading small, up or down, not doing much with your money, but you're gaining your knowledge. So I say that you have two accounts, your knowledge account and your brokerage account. You got to grow your knowledge account enough so that you can grow your brokerage account later on, because then you'll be better prepared on every trade.
So where do you recommend, like that student you had for the first 9 months, what did you recommend that they do? Like, how did they start off? How much money do you recommend these guys put into it? How much money do they play around with, like on a day-to-day basis? What are they like messing around with as far as investments and putting their money in the game? Like, how does that actually work?
Yeah, I always tell people to start small. Like if they think like, oh, I have an extra 5,000, I'm like, good, start with 1,000. Like if someone says like, oh, I have an extra 20,000, good, start with 2,000. Start with 1/10 of what you think, because it's so much harder in the beginning to like, cut losses, to stay disciplined, to not believe in these companies. The stocks are going up. Sometimes, my cynical attitude, and I'm like, no, this company's a scam. Then it spikes up 10 times. And people are like, how could you miss that? So you have to learn to control your emotions. If I miss a play, I miss a play, but I just try to take my singles. So a lot of like my students are like, I'm the Ichiro of penny stocks, where I've just hit single after single after single. And you have to find what works for you. Some people do like going for home runs. This is another thing. It's not even an exact science with, my strategy. You have to find what works best for you. I'm very impatient, as you can probably tell by the way I talk. I can't hold a stock for more than a few minutes, hours, or days. Some people, like one of my students, his name is Tim Lento. He's made $700,000 now over the past few years. But he finds these scams and he bets against them because he knows that they're scams. And he holds them for weeks or months at a time because he knows they're eventually going to collapse. And he's made 700 grand that way. He's in New Jersey. I got to go visit him. I could never do that. I tried to bet against a scam 1 day, 2 days, 3 days. I was like, come on, like it's not collapsing, and I'm losing my mind. So you have to understand what's right for your personality. But while you're learning what works best for you, you learn how the game works, you get experience. This year we have a lot of coronavirus stocks and electric vehicle stocks. Last year, we had a lot of weed stocks spiking. The year before, it was crypto. The year before, it was China. So there's usually like a hot sector. Sometimes there's no hot sector. So there might be like 2 weeks where there's no good plays and people are like, it's all over. And I'm like, relax. Every now and then, there might not be a great play. So you have to get used to understanding that sometimes the best trade is no trade. And people have problems with that because then you're just sitting on your hands. You're like, come on, Tim, I need to make money. But when you try to force a trade, you usually force a crappy trade, then you lose. So you need to learn patience. It's really complex. And my best students who are doing well in 2020, they're not just students from 2019 or 2018. My best students this year have been with me since 2016, 2017. They've seen slower times. Now they're prepared.
Nice. So when you say the phrase basically betting for it, I forget exactly how you put it, but betting for it to fail, betting for these companies to fail.
Yeah.
What is that? How does that actually work? Like you're putting your money into a company, and then this guy that you said did really well, your student, he waited months and then it collapsed. How did he make money from the collapse of it? Though I'm kind of like,
so this is called short selling. Have you heard the phrase "don't sell yourself short"? Like don't underestimate yourself. Well, in this case, you should underestimate these companies because they're all scams. Or, maybe they have one product and they're going to fail. Somehow, like either they're doing something illegal or their company management is inept. Either way, the stock's going to zero. So in order to profit off a stock going down, you have to take a negative position. And this freaks people out. Like normally, if you invest in a company or you buy a company, you're like, okay, like APT, going back to that mask company, right? Let's say you buy 1,000 shares at $4, so you put in $4,000. Let's say you're right about the pandemic of the century, which is, terrible, but fantastic for mask companies. The stock goes from 4 to 40. You sell your 1,000 shares at 40. 40 minus 4 is 36. You just made $36,000 on your $4,000 investment. Obviously, that's best case. That's if you capture the entire move. That never happens. But let's say you see it at $40 a share. It doesn't have to be a scam. Remember, it can just be overvalued. And you might be like, whoa, this stock has gone from 4 to 40. This is crazy. It is not worth $40 a share. So let's say you take the same 1,000 shares, but you take a negative position. So you're selling shares that you don't own at $40 a share. So you're taking a negative 1,000 shares. And then hopefully, the stock comes back down. Let's say the pandemic is, over and it comes back down to 4. You buy back your negative 1,000 shares at 4. It's the exact same trade. You're buying at 4 and selling at 40, just reverse chronological. It's like a Christopher Nolan movie, right? So it's just like all backwards, and you're just betting on lower prices. So you take a negative position and you profit when the stock goes negative. And negative times a negative is positive. Math helps.
Gotcha. It's a little tricky, confusing, but it actually makes sense. And I can see though why it's tougher for someone like you to sit on something like that, where you're ready for the fast plays. You want to see the returns faster, right? Like right away.
But sometimes when these stocks collapse, like sometimes the FBI has raided their offices and they put out a press release, or someone posts like a video on Twitter, and then you see the stock collapsing. And I say it's like, surfing a tsunami of sellers where, it's going straight down. And so these stocks can tank 50, 60, 70% in a morning. So sometimes I do short sell. I've made millions short selling, but not holding for days or weeks. I'm usually there for like a day or two. And if it doesn't work out, I'm out for small losses.
Gotcha. So what are you looking for though in these penny stocks? And by the way, is there any penny stocks that any one of us, like listeners and people and I right now would recognize, like some of these names? Are there any names at all that are like familiar or popular?
Like JCPenney is a penny stock right now.
No shit.
Yeah, but there's a difference. I'm glad you asked this. So just because the stock is trading at $1 or $2 a share, like JCPenney is trading very low. Hertz right now is another penny stock, right? These are big companies, but they're bankrupt or near bankrupt. So just because their share price is low, they also have billions of shares outstanding. So to get the value of a company, you have to multiply the share price by the shares outstanding. So JCPenney, it's trading at, last I checked, like 30 cents a share, but there's billions of shares out there. Hertz, again, trading at like $1.50, but billions of shares. So even though they're near bankruptcy and pretty much failing, they're still worth billions of dollars because they have real estate. Hertz has the cars. So they're not totally worthless, as opposed to a lot of the true penny stocks that I play. A stock trading at 30 cents might only have 10 million shares out there. 30 cents times 10 million means that it's a $3 million company. So it's a very big difference of a $3 million company versus a $3 billion company, even though their share price is the same. So you have to look at the shares outstanding, and people get confused by that. So I trade small companies, like not necessarily 3 million, that would be a little too small, but like 20 million, 50 million, $100 million companies. 100 million, which, to me and you and most people listening, like $100 million is a lot. If you're $100 million on Wall Street, you're nothing. You're a pipsqueak. you can't even get like meetings with Goldman Sachs. Like it's crazy how much money there is on Wall Street. And so you have to know the difference. This is why, like, hopefully I can reach some of your listeners and get them to not trade like Apple or Tesla or Amazon, because that's what most people do and they've done well. But you only make like 20, 30, maybe 50% per year. So if you have like, let's say like 10 grand and you put your money in Apple, let's say you just put all your money in Apple. Apple's a good company. Everyone loves it. Okay. Your 10 grand might become like 15 grand or 18 grand by the end of the year. That's good. I mean, it's still profits, but you're never really going to grow it exponentially, where if you're taking small gains, like for me, if I have a 10 grand account and I see a hot penny stock, like APT, I'm not going to buy it at 4 and sell it at 40. That's ideal. But let's say with 10 grand, I buy 1,000 shares of APT at 4, and I sell it at 8. I just made 4 grand on a little 4 grand investment in what, a day or two, as opposed to waiting for months or years with Apple or Tesla or Amazon. So it's just a different game, and it depends on how much time you want to put in. Like, if you're busy, if you have no time, by all means, go invest in Apple, Amazon, Tesla. They're good quality companies. They go up usually over time. But you got to have, the right kind of patience. Like, that's like 2, 3, 5, 10 years of holding. And, if you have a job, you're in school, and you just want your money to work for you in the background, by all means, that's good. But if you have nothing to do or very little to do, and most people are watching Netflix and playing video games, wasting their fucking lives away. Sorry, excuse my French, but they're so bored during this. Oh, it's so tough to be quarantined. Why don't you learn a new skill? Why don't you learn how to grow your small ass account exponentially? And that's what I am excited for right now with the pandemic. Obviously, the situation sucks, but we have these new technologies, like just us talking. This wasn't possible 5, 10 years ago. And now you can learn so much stuff so much quicker. So I'm excited once people find what they love and they start really pushing that educationally speaking. It doesn't have to be trading. I mean, trading penny stocks is weird.
Yeah. I mean, hey, it works though, as far as, what you're doing. But so you're basically saying that in the bigger companies, it's, there's a lot less volatility and a lot more potential for like huge gains. And the actual potential comes from the smaller companies. It's kind of a little counterintuitive, I think, because, thinking on the surface, you're like, oh, I can make a ton with Apple or whatever, these huge companies. But the real money is in the smaller companies because there's so much more changing and ups and downs with them.
Yeah, I mean, there's more money if you have a small account. So it's all about big or small, right? So if you already have like $10 million, you don't need to trade penny stocks. Put it in the S&P 500. That's the major index that tracks the 500 biggest companies. You'll make an average of 8 to 10% per year. If you put in 10 million, you're making 800 grand to $1 million a year. No, you don't have to do all these weird counterintuitive rules. You don't have to spend any time. That's just on average over time. But if you don't have 10 million, if you have 10,000, over a year, and you might make what, 800? Like that's nothing. So you have to understand your account size. You have to understand how much time you want to put in. And too many people with small accounts and a lot of time that they could do trading or learn trading, they're doing the opposite because they just know other people have Apple and Tesla. And by the way, we've also had an 11-year bull market. This is the longest bull market in history. So it's not exactly the best time to invest in companies. I don't care how much innovation Tesla, Amazon, and Apple are having. They go in cycles. There's a thing called the lost decade, which basically if you invested in the year like 2000, by 2008, you were even pretty much because there was a crash in 2000 and there was a crash in 2008. So you're waiting 8 years. Let's say, oh, I'm going to be a long-term investor. Then you check after 8 years and you've made nothing. You've wasted 8 years. Like my top student, Tim Grittani, 1,500 into 12.7 million. He did that in 8 years versus the lost decade for most investors. So time is the number one, asset. It's not about money. So what can you do with your time, right? Like you can never go backwards in time. I don't care how rich I get or how rich you get or anybody listening. We can never get time back. We can't go backwards. So I'm always trying to maximize my time. I want as much money as possible, not just for me, but for my students and for charity now. So I'm trading the most volatile stocks. I'm in and out very quickly. Like today, I finished up 1,700 on the day. It's slow, a little bit of a slower day. Yesterday it was about 4,500. The day before was like 18,000. So it goes up and down. It's not like every day. And last week I lost like $400 on one day. And everyone's like, oh, you lost. sometimes that happens, but my losses are smaller than my gains. So I'm always thinking about the end goal. I know some of my top students, they turn off their profit and loss column on their computer. They're just letting the charts play out. And I'm like, I can't do that. I'm Jewish. I always care about every single penny. Like, it's just in my genes. I don't know. I tell them, I was like, I'm going to give you a bar mitzvah. You have to start caring about every penny more. But it worked for them. So, they let the patterns play out. For me, I oftentimes take profits too quickly.
How much, you mentioned time a moment ago, but how much time are you spending and how much time do you recommend people spend checking their stocks, looking at their stocks? I know in one of those interviews, I think it was the London one, where you were like, I know you are just talking to you, and I love it though, but you got like this ADD brain going on where it's like you're always thinking about the stocks and the buzzing. And I think I heard a couple buzzes earlier. So like how much time out of the day are you spending checking the stocks and putting your time into it and actually doing the work that you need to do?
We were doing an interview in London, and the stock market, the U.S. stock market is open at night there. So like I had to go during the U.S. stock market hours, and I'm getting like alerts on my phone, and I'm like, he's like, turn off your phone. This is an interview. I'm like, I can't do it. So for me, I'm an addict. I'm a full-blown addict. I admit that. I acknowledge it. You have to choose. Like, again, like Tim Lento, one of my students, I mean, he helps me moderate my chat room too. But if he didn't do that, he's just betting on the scams, and he can walk away for weeks at a time, and then he'll come back in a few months. So if that's your pattern, then you don't need that much time at all. For me, I'm every day looking, but it's not like 9 to 5 job. The most volatility is between the stock market open, like the first hour, 9:30 a.m. and 10:30 a.m. Eastern. And then the last hour of the trading day, 3 to 4 p.m. Eastern. So if I really just wanted to focus on that, if I didn't have a chat room and I'm answering questions all day, but if I'm just a trader, I could work 2 hours a day and capture the majority of the volatility. So I know a lot of people who do that. Tim Grattani, my top student, who's at 12.7 million, he's made 3 million of it this year in 2020. He's had a fantastic year, and he's taken the last 3 months off. He's like, you know what? I made 3 million, just had a baby. I'm going to spend time with my family. So now he's done nothing for 3 months, and he's loving it. I just talked to him the other day. He moved his whole family to the Caribbean. He's like playing with the sea turtles. I was like, yo, we got to talk. He's like, sorry, the sea turtles are out. I'll call you later. And I was like, the sea turtles, but that's awesome. So you choose how much time and what strategy works best for you. Every single person is different. This is what I've learned. In the beginning of my teaching, I was always like, you have to do it this way. But now I have thousands of students around the world. Everyone has a different time zone, different personality. So it's really about tinkering and testing. Like I tell people, you got to think of yourself as a scientist, and a scientist doesn't come up with like the magic formula right away. They do lots of experiments. So try trading just for the first hour. Try trading for the last hour. Try holding a stock for weeks. See how you feel and test with small amounts. Like this is why I say start with small dollar amounts, because you don't know. And then you size up, you take bigger positions once you're like, okay, I know this pattern. This works for my personality. This works for me.
Gotcha. So do you have that E-Trade app on your phone? Is that what you're getting buzzes for though? Or is it something else?
So my team actually created their own app called Stocks to Trade. It's better. It's specifically tailored for low price stocks, because E-Trade and every other broker, again, they don't want people trading penny stocks because frankly, like it's annoying. Like penny stocks move very quickly. Newbie customers would call them up and be like, I didn't get executed, but like, that's just penny stocks. That's not the broker's fault. So E-Trade is like, can you stop like telling people to trade penny stocks? Like this niche sucks. But again, for me, I like those inefficiencies. I like those problems because that opens up opportunity. So I use Stocks to Trade, and I was actually testing out a new app for Stocks to Trade mobile, which is finally coming out soon.
So you got your own app now that you use, and you said you still use E-Trade though? What's the E-Trade use for?
Yeah, so I don't have a brokerage. Stocks to Trade is just charts and news. Stocks to Trade has this thing called Breaking News Chat, which is responsible for like half my profits this year. And it's 2 guys who I know, they're ex-hedge fund traders. And so they're curating all the breaking news specifically for low price stocks. I basically created this whole little industry for low price stocks because I think that's the best niche for people with small accounts. So
Gotcha.
What was going on my phone, I was getting a Stocks to Trade breaking news alert. And I always check the Stocks to Trade breaking news alerts. And Brian yelled at me. He's like, we're doing an interview. Like, you're not supposed to have your phone on. Like, it messes up with like the electronics. And I was like, I'm turning it off. There's
Gotcha.
more. You didn't see the whole thing. I was like, breaking news alert.
Gotcha. So, but you don't actually make moves on your phone like that. Do you make all your moves on the computer and you're online doing that stuff? You don't make, because I know Robinhood, like my friends have it, you can do it right on the phone. You mentioned that earlier, but you're doing all this
Yeah.
stuff on the computer?
I'm overly cynical and overly cautious just because I've seen so many traders blow up over the stupidest things. I mean, I've seen people literally where they put the wrong thumb, right? Like if you just swipe it a little too much and you bought like 77,000 shares instead of 7,000 shares, like little things matter. So I'm like a klutz. Even just walking into the door here, I just like banged right into the door. And I was like, I know where the door is. Why could I not go through it? So I recognize that I'm a klutz. I recognize that fat finger mistakes is what they're called happen. I still make mistakes sometimes, like with my keyboard. Right now, my keyboard is missing like 4 keys. I did a video on this. I can't change my laptop because now I'm like superstitious. I'm having my best year ever. It's my lucky laptop, but like half the keys are missing. So like my alerts, like the K button doesn't really work. The T button is off. Like, here, wait. Come on, you're on screen, damn it. Oh, I can't even pull them out. They're stuck. But yeah.
Nice. So as far as like Wall Street and all the big companies, does that have any effect? And by the way, like the upcoming election, not to get into politics or anything in this episode, but does that have any effect on what's going on with your trading, your investing, what you're thinking about for the future? And does Wall Street and, you hear the NASDAQ and all that stuff, does that affect what you do on a day-to-day basis either?
Look at you. You know this stuff. Like you said you didn't know. Like
I don't know much.
Well, you're asking good questions. You're asking better questions than a lot of people in my industry. So maybe you have a little bit of a.
I told you I got to get into this at some point. I'm going to have to hit you up after the call.
I think everyone should get into the finance world a little bit. Just have your money work for you, whether you're investing in the S&P 500 or Apple or trading more aggressively. 3 out of 4 stocks follow the market. So I'm always watching the overall market just in case, especially, on election day, the day after election, like I'm doing an all day special live webinar because we're going to have huge volatility. And politics, I mean, it's not an exact science, but we have 2 very specific candidates with, what they like, right? Like current President Trump, like he loves fossil fuels. Biden is all clean energy. So let's just say Biden wins. Guess what? The clean energy stocks are going to spike. Electric vehicle stocks are going to spike. If Trump wins, then the solar plays are going to crash because it's just basically stuff like that. So you can make some rare, like very simple assumptions based on that stuff. But again, it's not an exact science. Like sometimes it might already be priced in. What if like the Biden win is already priced in? And then you think that solar stocks are going to spike more because he just won, but maybe already everyone anticipated it, and then the stock starts going down. And then you're like, why are stocks going down for solar? Like this should be a good thing. So sometimes I say it's called buy the rumor, sell the news. So sometimes like you get a company where you're expected really good news, and then the good news happens and the stock goes down. And people are like, why is it going down? Because it was already priced in. So you have to understand that, and that's not easy for people to think. Like people are used to exact sciences, right? Like if you know math, like 5 + 7 always equals 12, right? It's a specific answer. But if everyone already knows 5 + 7 equals 12, in this case, 5 + 7 might equal 10. And people are like, what? No. And that's the reality of the situation. Sometimes a company, like it's not even about the overall market or the election. Sometimes a company reports terrible earnings. Companies report the revenues and profits 4 times a year. So you have quarterly profits, quarterly revenues. And let's say they say, we just lost $1 billion this quarter. It's terrible news. So everyone's like, whoa, I got to sell this stock. They just lost a huge amount of money. But deep down in the press release was a quote from the CEO saying we lost $1 billion because we invested heavily into this new technology that's showing promise. And then the stock goes up. And people are like, how is the stock going up? They just lost $1 billion. Because the stock market is forward pricing. So even though they lost $1 billion, this new technology might be worth $2 billion going forward. So these are the kinds of nuances that I teach that most people just are unprepared for. They just think like good news, stock should go up. And they're like cavemen. Most people are like cavemen, like good news, buy stock. Bad news, bad stock. But it's not that simple. The cavemen are gone. So you have to think a little bit more, and that gets people because, it's complicated in the beginning, but then it becomes kind of second nature.
Yeah. How much? So it sounds like you got to kind of read a little more into the fine print and some of these things and not just take it for, the headline of it. How much of this
It might not even be in the press release. Like when companies report earnings, they also do conference calls. So the whole press release might be very positive, right? record earnings, record profits. The CEO says, we're doing great. And then on the conference call, 36 minutes in, he's like, yeah, we're doing great, but this new product, we're having some problems with it. And then the stock tanks 20%. And then if you're just reading the press release, you're like, everything was positive, and you didn't listen to the conference call. So you really have to be meticulous. I don't even like holding through conference calls because I don't know what they're going to say. So I don't like those guessing games. I usually exit before there's like an event where the company is speaking.
So just real quickly on a percentage wise, how much do you think is art? How much do you think is science? And then also a follow-up to what you just said, how many of these penny stocks are you investing your time into? Like if you have one and you're putting all this time and, doing all the research into it, would you have like 10 other ones that you're looking into too? Or do you kind of just stick with it like one or two at a time?
Yeah. So, I mean, some people will just say I'm lucky. Like my top students are lucky. I find that, the harder I work, the luckier I get. The more that I study, the more that I prepare. I put in, it's impressive that I've made millions of dollars, but if you look at how many hours I put in, I'm like getting paid like slave wages, right? Like I probably should be getting more, but there's just not much more in penny stocks. Like I've already made a lot of money. I usually take one or two positions at a time, max, because I'm so focused on every single thing. Like rule number one for me is cut losses quickly. So because I know the pattern so well, if the stock stops doing exactly what I want, I'm like, I'm out. Because there have been times in the past where I didn't do that, and it's a very slippery slope. And you're like trying to justify to your ego, like, it's okay. It's just a little loss. Like, I've made some boneheaded mistakes. Now I'm just crazy sensitive because I'm showing my screen, because I'm trying to, set a good example. So sometimes I don't even wait for a loss to get out. Sometimes I have a small profit, but I'm just like, I'm freaked out. I don't know what's going on. I'm out. And I play it so safe because I know the stats and I know this is how traders and especially newbies should be. So I'm focused on one or two stocks max. Most mutual funds have like, 50 to 100, sometimes 500 positions. They're quote diversified with tons of different investments. But in reality, during the 2008 crash, even diversified mutual funds, if you have 50 stocks and they're all fucking crashing, you're not diversified, you're just losing more money. Yeah. So if the market crashes, you lose everything, or not everything. The mutual funds were down like 40 or 50%, but that's still a lot of money. With hedge funds, the difference between a hedge fund and a mutual fund, hedge funds can go long and short. So you can bet on stocks going up, you can bet on stocks going down, you can bet on, entire countries going up. Like there are hedge funds dedicated to like Africa, and you're like, we're long on Ghana, but we're negative on Cameroon. There's so many different investments in hedge funds. They're quote diversified again because they have billions of dollars, and they say, okay, we have 70% of our portfolio long bias, meaning that they're bullish, and then 30% of the portfolio short bias, so they're betting on different sectors going up and down. And theoretically, you can do better that way, but again, most traders, most people with small accounts, you don't need more than one or two positions. And I'm not saying go all in. Like if I have a $10,000 account, I'm putting like $2,000 into a position. And that way I'm not risking more than like 20% of my entire account on any position.
So on the question of percentages, like 50% art, 50% science and that type of thing, or is it more art than science?
I don't know the exact percentage. Sometimes it feels so easy and you're like, why can't every trade be like that? Where there's good news and you knew the good news was going to happen and the stock goes up and you're just like, you feel like, the Lord is like shining down on you. And then sometimes you do so much research and nothing goes right. And you're just like, it changes, right? Like in 2020 with the pandemic, with all this volatility, we had a 30% off market sell-off earlier when the pandemic first started happening. People were like, Starbucks was down like 50%. So you had that big crash, and then that was followed by the best 100 days ever. The best 100 days ever. Right now we're pretty much unchanged for the year. So we had a big drop and then a big bounce, but we're pretty much steady. I just need volatility. That's what it comes down to. So I'm looking for my patterns. I'm looking for my plays. There aren't as many scams collapsing right now because there aren't as many scams because like people don't believe scams right now. Everyone's really kind of like overly cautious. So you don't have like Jordan Belfort's running around like scamming people, but you have a lot of people now on Telegram, Discord, Twitter, StockTwits, and they're just promoting crap companies and they're using like 30 different usernames. So I think there is still a lot of promotion going on, but it's gone very underground using all these new platforms. Now WhatsApp and Snapchat and TikTok, people are just trying to lure people into new companies all the time. So there's always going to be small companies and like kind of sketchy people with random usernames pumping them up. So you can't, ignore them. All you can do is be educated enough to like not believe them.
Gotcha. So if you said you usually start with like $12,000 and you repeat this process and you keep doing it. If you have $12,000 and you're focusing on like one or two stocks a day, do you have anything else going, and you put like say $2,000 on one stock? What's the rest of your like portfolio look like? Do you have anything else going on there? Is it just kind of like sitting around and it's just 1 to 2 a day and that's it? You just keep making moves.
Correct. I say, trade like a sniper. I take one shot. I don't have like,
Gotcha.
Like this isn't like the British Army circa 1700 where you have like 5,000 redcoats. I'm like the American revolutionaries hiding in the trees, picking off the redcoats one by one.
Cool.
And I think that's a good way to do it when you have a small account. Again, if I had, $50 million, I would have a different mentality because then I would be like the British redcoats with a giant army, and guerrilla warfare doesn't work like that. But most people with small accounts, anywhere up to like, I would say even $100,000, which is the majority of people, they need to take one or two positions and just try to make 1,000 or two and try to do it over and over again. And if you make 1,000 or two on a trade, you get out, you take those profits, you move on to something else. And if it doesn't work out, you lose 200 or 300. But if you have $1,000 profit, $1,000 profit, $200 loss, $2,000 profit, $1,500 profit, $300 loss, your average goes up, your wealth goes up. And then you can take bigger positions. And then instead of trying to make $2,000 a day, then you can make, 20 grand in a day when you have a bigger account. But in the beginning, you got to start small. So it might not even be $2,000 a day. It might be 200 in a day. That's fine too. You have to learn the process of taking one shot and trying to make 10 or 15 or 20% on that trade.
Do you ever shoot at the same target that you shot at before? Do you ever come back to the same stocks that you had before?
100%. I mean, the patterns repeat again, like APT. I mean, every time there was, another pandemic scare, like more negative news, mask stocks would all shoot up. So once like certain companies and sectors, especially when they have made you money in the past, DGLY makes police body cameras. So every time there's like a protest or riots, unfortunately, this stock starts spiking because more and more police units probably need body cameras. So, that's like you have the usual suspects when there's a specific given news. And that's why experience pays, because when I see news of protests or riots breaking out, I immediately look at DGLY. I don't have to research. I don't have to look around which company. I've traded DGLY probably 100 times.
Nice. Have you ever thought about, I mean, I'm sure you have, but will you ever go to like just putting more money instead of the $12,000 that you're putting into this? Why not do like say $100,000? If you're getting so successful at it and you only lose 30% of the time, you're winning 70%. Why not just put like more and like really double down on this money?
I've done that in the past. I've done big account challenges just because sometimes I'm just bored with like $12,000. Like I'm a multimillionaire. Like why am I pretending to be like so poor? Like it's rough. Like the fun of trading. Like I made $100,000 in one day as a college freshman. Like that's fun. That's the adrenaline rush.
Yeah.
But then I also have students where they're starting with like $5,000. Most students start with like $2,000 or $3,000. So I have to consider them too. And I do them a disservice if I trade too big, because then they're like, I want to do that too. And then I'm setting like a bad example, right? So like, why don't you ask like LeBron James, like you have so much money, you're so successful. Why don't you just go out and party and drink every night? You can do it, but that would set a bad example. So I'm also trading for my students too. So I have to get used to trading with a small account. But again, I grow my account. So I'm not trading with $12,000 right now. I mean, I've made nearly $1 million now in 2020. So I've grown it. So now I can bet bigger. But again, even though I have nearly $1 million in my account now, I still don't use that much. I still trade with like 20 or 30 grand because again, it's about my students. That's my business. And I donate the trading profits to charity. Like it would be better for me personally. It would be more fun if I'm like, hey, I made 50 grand today. But again, my students can't do that. So that would just be like rubbing it in. And then when they would try to do it with their small account size, it would actually mess up. So I'm specifically trying to trade like a small account, pretending in my head that's all I have so that people can learn the process.
Gotcha. That's awesome, man. That's really cool. Just a quick little question, then we'll wrap up in a moment. But what does like the tax situation look like on this? Is it just a mess at the end of the year when you go to do your taxes and, you have to claim all these things and the ups and downs that you had, or is it fairly simple and a lot easier than I might think or some people?
I mean, I don't know the specifics. I just hand all my stuff to my accountant, and he does it all. I think I pay like 40% in taxes, which sucks. But, like that taxes, death and taxes are the two things. I don't mind paying. Like, it's not the end of the world. I'm proud to pay it. But at the same time, I mean, that's just part of the game. I also trade, in my IRA, which is tax-free until, you retire over the age of 60. So you can compound that account and not pay taxes until later on. So that gives you the ability to grow your account more. But I'm not a broker. I'm not an accountant. I have no licenses whatsoever. I'm just a rich guy trying to like teach.
Cool.
Literally consult your accountant, because everyone's different too. Like everyone has a different tax situation. I don't give, tax advice.
Yeah. I'm just wondering like how confusing it would be, but it doesn't sound like it's too bad as long as you have somebody working with you on it.
Yeah, I mean, I don't think it's that bad. I mean, you can see, I think it's called the Schedule D, where you just see all your gains and all your losses and you match it up, and, whatever percent there is, then you pay that. I mean, I'm a Florida resident, so there's zero state tax, which I like, but I know many people live in like New York or California, where there's like 13% if you make enough, and that sucks.
Yeah. Oh yeah, definitely does. So just kind of wrapping things up, what is the last send-off takeaway message you'd like to leave the Elite Man audience? And we've gotten so much out of this interview, man. I learned a ton myself. Like I told you before, I didn't know much going into it. I feel like I know a little bit more now. But what's a send-off takeaway message you'd like to leave, and then a place our listeners can check out your work and what you're up to?
Yeah, so everything I do is at timothysykes.com, or you can just Google Timothy Sykes. Google me on YouTube, type in Timothy Sykes, and watch some of my drunk ass shenanigans on some reality shows. I also have 1,500 free video lessons on my YouTube channel, just to teach everything. I show every trade, good trades, bad trades, student trades. I think that the key is finding what you love in life, not just in trading or, based on money, but finding what you love. Like I didn't expect to be a teacher. I didn't expect to love charity so much. We didn't talk about this, but my charity has built 70 schools now. My goal is to build 1,000+ schools. I love it. Pre-pandemic, I was traveling to all these different countries. We built schools in Guatemala, Ghana, Laos, Nepal, even in the US, a few libraries too. So I love going there and seeing that the money can really impact people and communities. I didn't expect that. You asked me, like, I'm going to donate 100% of my trading bucks to charity like 10 years ago. I'd be like, fuck off. Like, what? But you learn what makes you happy in life. I used to love, cars. I dreamt of like owning cars and driving nice cars. I had like a Ferrari Testarossa poster up on my wall. I bought a Ferrari, I bought a Lamborghini. I bought a Rolls Royce. On my second Lamborghini, I was like, I don't really feel an adrenaline rush. And I was a little concerned. And frankly, it just didn't, it didn't amp me up like it once did, because I had, basically achieved all my goals. And then I needed new goals. And now my goal is to build 1,000+ schools. That's infinitely harder than just buying a Lamborghini. But it's more gratifying for me. So it might not be what you expect, but you, again, have to think of yourself as a scientist. No matter what your job is, no matter what city you're in, no matter what strategy you're using to try to make money, always consider something else. Like, we live in this fascinating time where me and you are able to talk cross country live. Like, this was not possible a few years ago. And this is just one example of how much technology has changed, and you need to capitalize on that. Like, you can learn anything on the internet. You have no excuse. In the past, like maybe like a few hundred years ago, like if your father was like a tailor, you're a tailor. Like, you have no choice, right? Like, whatever you're born into, that's your destiny. You can't escape it. And if you escape it, then it's like a big conflict. Now you can do anything if you put in the time. So to become an expert in something, you have to put in hundreds, if not thousands of hours. And so you have to truly love it. If you just do something for the money, like I have some people who are like, I don't really want to be a trader, but I want to make a lot of money. I mean, you got to learn to love the process of learning, right? Like, this is a process. This is a marathon, not a sprint. For me, I've learned what I'm best at, trading with a small account. Like, who knew I would be better at teaching and trading with a small account rather than managing, millions or billions for some rich assholes who I hate and I try to be nice to at charity events, but my personality gets in the way and I'm just bored as fuck. I didn't know that until I started going to these charity events. And like, I was like, I want to actually do the charity, and I don't want to be fake with these rich assholes. So you find what you're best at, and it's not just about how much money. It's not just about, what you might think, like with like a big place. Like I'm proud, I'm in Miami Beach. I got this big place for my parents. I'm very proud of that. But I personally don't need a big place. I prefer traveling. Last year I did 32 countries. I've been to over 120 countries. That's good for me. I like trading on third world country internet in the middle of the fucking night in Bali when my new school is opening the next day and I'm staying up all night to fucking trade. I'm messed up in the head, but at least I recognize that and I go with it.
Love it. That's awesome. You mentioned timothysykes.com, but where can guys get started with, you do like the student coaching and all that stuff? If they want to actually get started like in this and maybe start small, $1,000, $2,000, whatever it is that you always recommend starting them small, where do they go for that?
Yeah, so timothysykes.com/plans. And we have a few different plans. You can choose whether you want video lessons. I give live webinars. My top students give webinars, so you can see our screens. I'm doing an all-day live webinar tomorrow on Friday. So you're going to see me. I'll probably lose my voice or I'll sound like really weird by the end of the day because I talk like this all day and I'm answering questions and you see what I'm trading and people are like, what do you think about this ticker? And I'm like, no, you're a fucking idiot. And so like, I'm in it, but I'm trying to train people. Again, I'm not here to be their friend. Like I tell them if they want a friend, go buy a fucking dog. I'm here to teach them and I'm their drill sergeant, and trading is a battlefield. So I'm here to help them survive. I'm here to help them thrive. Actually 6,600 video lessons now. I make a video lesson nearly every single day. What I did right, what I did wrong, what I could have done better. I still think of myself as a scientist, and that's the key. You have to endlessly optimize and refine your process until you find what works best for you.
Real quick too, I forgot to ask this one, but how much money have you made doing this process throughout your career in the last 20 years or so? How much money have you made?
Yeah, so I show on timothysykes.com, you can see every trade that I've made over 20 plus years. I'm a big believer in transparency. I show my income tax returns, my audits. I've made about $6 million right now. I'm coming up on my $6 million milestone, hopefully in the next few weeks. People are like, is it going to happen before year end? I'm like, I don't know. I'm at like 5.9.6. I take it one trade at a time. But again, there's moving targets, right? So like, even though I've done well, I've made a few $1 million. I mean, there are traders on Wall Street who make $6 million in a day. So I'm still a pipsqueak compared to them. So you have to have the proper perspective.
Gotcha.
But I just try to take it one trade at a time, and I try to show my students, right or wrong what I do. My video lessons where I mess up, like, I used to have like a drinking problem and I would trade drunk, and like, I would make a video lesson drunk too. And it was like, there's some messed up video lessons in my library. But I'm like, I show everything and I'm just trying to be like, don't trade drunk. Like, that's stupid. But I had to try it and it didn't end well. I lost, I think like 10 or 15 grand that day. That was stupid.
Nice. Those are probably the most entertaining ones. I'll have to check those out too.
They're like the most popular. There's some crazy video lessons. I'll do whatever I can to get people, to learn. I'll make some crazy analogies. But now it's really just maximizing the opportunity, because 2020, shitty year. Can I swear on your program? I don't even know.
Oh, no, we're not allowed to swear on this.
Like it's, right now it's like kind of pushing it as much as you can while this volatility lasts, because Robinhood literally did not have that many people pre-pandemic. But now everyone's sitting home. Everyone wants to be a trader. There's so many stocks in place, so much volatility, so much liquidity. I'd feel guilty missing the opportunity. I think of myself as a retired trader, even though I trade every day, but like, it's a little mindset trick where I'm like, nope, I don't need to trade today. I don't need to trade today. I'm retired. But then if there's a play that's good enough, I would feel guilty missing it. I come out of retirement. Obviously I'm going to come out of retirement every day, but it just puts me in the mindset, or nearly every day. I can't remember the last time I didn't trade in a day. I don't think there's been a day in 2020 that I haven't traded. In 2019, it was slower. In 2019, I only made like 120, 130 grand on the year, which is still good considering I traveled to 32 countries. But at the same time, it's just nothing like 2020. This is the time to really push it. And I don't know how long it's going to last. So I'm grateful for every day, every play.
Gotcha. Well, Tim, I'm grateful for having you on the show, man. Really do appreciate your time. And I learned a ton, like I mentioned before. And I know our guys are going to love this one. So take care, and I'll talk to you soon.
My pleasure. Thanks, man.